Okay, I think we'll just kick off. We usually have more students will join. We usually have a few late joiners, and then, as you guys know, most will be watching back the recording of this. But in any case, we are very lucky to have the Ishka team joining us this evening. They will be talking about airline credit analysis in the first part, and then in the second half, it'll be aircraft valuations and appraisals. And I suspect, as Eddie alluded to here in the chat, that um, there'll be some discussion on the state of the industry and what's going on in the market. So I think with that in mind, Eddie, I might just turn it over to you if you want to introduce the team, um, and then I'll just turn it over to you. You should have control of the PowerPoint there on the bottom left to navigate through the slides. Um, so I think over to you, Eddie.
Right. Is the navigation just for me, or can others do that as well? Okay.
Take breaks. Whenever you see fit, wherever there's a natural break there. I usually do, 2 or 3 5 to 10 minute breaks. But you guys have done this before, so nothing that you're not familiar with. So over to you guys.
Okay. Well, thank you. Hello, everyone. I could just tell you a little bit about Ishka before we start. As you might know, Ishka delivers data and analytics, market intelligence for the aviation, finance, and investment community. Why we formed Ishka? We formed it mainly because the finance market is important to the industry, but it's working in an opaque environment. So what we thought we'd try and do is try and bring some change to that, try and bring some transparency for the people who are investing in aircraft and in taking asset risks. So it's not just the lessors or the investors, it's the airlines, the OEMs play a part, the insurance market as well, the MROs. So we try to cover all bases, and as capital markets are now more involved as well, the focus is very much on the investors. In terms of ourselves, I'm Eddie Pienzek. I've been in the business for quite some time. Used to work at Ascend and Airplanes before that, in the same kind of role, market analysis, aircraft valuations. We have Stuart Play on board as well. Stuart's got over 20 years experience as well. Stuart has a leasing background and finance background, as well as having worked in the appraisal and valuation side of things as well. Stuart has a very much a technical angle to his expertise. Paul O'Driscoll, he has airline experience in the Americas, and he is also an ISTAT certified appraiser, so he will be covering some of the talking points on the valuation element. Ansted has also got a lot of experience in airline financials, so he does a lot of the work and oversees our airline credit profile products as well. In terms of how we provide our services, we provide daily insights, which is a short form report. Always carries an Ishka view, which is our view and interpretation of what is going on in the marketplace. Which, as I've just mentioned, we have the credit profiles, and we also provide valuations through what we call transaction economics. And there, we don't just give our own view of the values, we also provide details of real transaction data points. And we also have something called a pricing benchmark, where we also have, we try and capture the market's view as well. So again, try and bring more transparency to the marketplace. We do an annual forecast, Ishka Vista, which came out in January this year. And that's probably become a little bit more relevant these days, as the market has been going through enough challenges to last a lifetime in the past 20 years. And we also provide finance guides and some of the basic sort of leasing 101, finance 101, industry 101 for the aviation market, especially for some new banks and the capital markets that are coming into the marketplace. And we cover those areas in terms of advisory. Again, if it doesn't fit into a product box, we can provide the advisory service as well. So people are always asking me, what do we think about certain parts of the market? We've covered areas like, the the growth in the finance, in the freighter conversion market, the impact of sustainable fuels, different aircraft programs and what they might do to the marketplace as well. So we try to cover all the spreads. And we produce or provide a whole series of events. Again, mainly geared to the finance market. We'll be going live again this year after a couple of years having gone virtual. And we go live at the end of March with our first event in this new series of events in London. And we'll be doing these around the globe, New York, Tokyo, Munich, and hopefully doing one in India as well this year, and also Dublin. So that's who we are and what we do. Over to Sid to give us the review on airline credit analysis.
Yeah, thanks, Eddie. Hello, everyone. I'll be, as Eddie mentioned, I'll be covering the airline side of things, and the plan is to cover what is credit risk assessment, why it is important, and obviously the events in the past month and certainly over the past 2 years have made it have highlighted the importance of why this process is important. And the other important part is how do we do it. We'll look at a few case studies and red flags to take note of when doing credit reviews, and of course some of the recent developments that have shaped the industry, and we'll see how the market has performed and how the airlines are responding. So, I mean, you guys probably have seen this chart, and I mean, the industry has faced several crises in the past, almost every decade. But clearly, the COVID crisis has been none previously. Obviously, the extent of the decline and the impact, not just on economy or the industry, even across on a humanitarian level, has been significant. And but the point is that aviation is a cyclical business, and as I mentioned, there have been crises, and the industry has bounced back every time. And in the past, or in general, travel demand has been correlated with macroeconomic situation, and traditionally, as economies have grown, as people's disposable incomes have grown, that has also boosted demand for air travel, as we are seeing in many emerging markets. So, what is credit analysis, and why is it important, and how do we do it? I mean, the why part is pretty clear, because there is huge sums of money involved. Aviation is a capital intensive business. There is a greater need for making sure that the financing which is being provided, there is appropriate risk assessment to it. So that these investment decisions are taken within an appropriate framework and on an informed basis, so as to minimize any potential adverse outcomes. Now, clearly, the events from the last 2 years, or even what's happening recently, it would have been difficult for anyone to predict. But still, there are through this process, there are ways in which the potential losses would have been minimized. And I mean, having kind of an integrated approach or an overall framework helps from a leasing perspective, or from a financier's perspective, or even from an investor's perspective, helps helps those parties to anticipate any potential issues and take corrective action, early action, if they are able to spot that in a timely manner, and if it is possible to exit that situation before things get really bad. and also limit any potential exposure to bankruptcies, defaults, which can have a significant impact on the financier's balance sheet and outlook. And I mean, at a most basic level, um, credit analysis would be understanding how much debt a company or an airline has, and whether it has the means to support those levels. In the past 2 years, that means part has been severely disrupted. So airlines haven't been making any money. It's the operating cash flows have been mostly negative. So um, how do we assess the credit worthiness? So ultimately, it came down to liquidity in for most airlines, and we'll see that in detail in the coming slides. But airlines which had strong liquidity entering the crisis, and airlines which had the necessary resources or unencumbered assets to raise more liquidity, have been able to survive the crisis and are now in a position to leverage the situation going ahead. So, of course, there have been other factors as well, like government support and the business model and the nature of operations, whether it's a full service airline or a low cost airline. So we'll see how all that kind of impacts the risk and the potential reward, and how do we kind of balance the two. So at the starting point for credit analysis, as you'll be aware, in most cases is a review of the financials. Now, there are almost 100 odd listed airlines in the world which provide regular financial updates, investor presentations, and there will be regulatory releases. So there is a lot of information that gets released through these sources. Beyond that, we have regulatory bodies like the US DOT or the Companies House in the UK, or even in Ireland, which make available financial records. Maybe not as frequent as a listed company would, but still there is some information available. But that becomes the starting point of our analysis. It's the main kind of basis for determining or understanding how sustainable the business is. So I've listed certain metrics here. There is, I mean, it's not just at an absolute level. So what we're trying to understand is how an airline kind of is performing vis-a-vis its peers, vis-a-vis itself in the past. So it's very relative, and a trend analysis of its revenues, its profitability, and all these ratios, margins, leverage, balance sheet ratios, which are leverage, gearing. That's very critical. So an analysis of last 3 or 4 years should reveal its how it has performed and its fundamental position. And then if the financials have been fundamentally consistently weak, then we would like to understand whether it's been on account of its own internal reasons, whether it's inefficiencies or a questionable business model, or a weak competitive position, or whether it's due to macro factors. So it's identifying what is causing that performance. Then when we're looking at margins, I mean, the most kind of critical margin that we look at from a P&L perspective would be the EBITDA margin, which is kind of equivalent to operating margin, and we kind of removing all the non-recurring or exceptional items, and we're able to compare airlines on an equal footing across the board. And also remove any effect of any non-recurring items which might impact the financial results of a particular year or on the plus or on the negative. Generally, before the crisis, an EBITDA margin of about 18% and above was considered healthy. Most LCCs would often hit 30% and above, but full service carriers would usually fluctuate between 18 and 25%. Then there is something called the RASK margin, which is revenue per available seat kilometer and the difference between cost. So again, it's kind of a similar metric, but it shows the operational efficiency of an airline. The next ratios, leverage and gearing, liquidity, these are all kind of balance sheet and capital structure ratios. And as I mentioned, the aviation is a capital intensive business. So usually airlines are quite leveraged. So just by that itself is not negative. But what we're trying to understand is what's the proportion of debt and equity. So again, we'll cover this in the upcoming slides. But historically, companies or even airlines which have had high debt loads have ended up in financial trouble, as you can imagine. So when situation is or when there is a crisis or when there are pressures on revenues, it affects a company's ability to service that debt. So from a leverage perspective, a ratio of less than 2 is what is considered healthy. So debt being 2 times its equity, or net debt being 2 times its sorry, that's gearing, but leverage would be 2 times its earnings or EBITDA. Then we want to understand the airline's risk management framework, and this is particularly important in the current setup when oil prices have risen to the extent they have, and they've been volatile as well. So after reaching $150, I think today they dropped below 100. So there's a huge fluctuation going on. So obviously, a lot of the airlines try to manage that risk through hedging, but many had given up that after the losses sustained during the early phases of the pandemic. So it's important to understand and identify what kind of risk management policies the airline has. Then I think I missed liquidity, and that's probably been the most important indicator in the past over the past 2 years. And as I mentioned, airlines which had liquidity and were able to raise liquidity have survived the crisis better than most and are in a position to take advantage. So again, historically, when looking at liquidity, we would consider a ratio of 18% of annual revenues. So whatever cash they have on the balance sheet, if that is 18% of annual revenues, that would be generally considered healthy. But that is under normal circumstances. In the current situation, we are also trying to we should also try to look at how it compares with their short-term commitments, whether it's debt or capex, and whether they have access to any credit facilities and any and their ability to raise more capital. So that's some of the things we're looking at from a liquidity perspective. And as I mentioned, doing a trend analysis is most important here, whether the financial is improving or it's weakening. Are there any major changes happening, and how does it compare with its peers? that's where most of the analysis is, and where we get most insight. It's rarely on an individual or absolute level. So here we have a case study about Air Berlin. So I don't know if you'll remember, but it kind of collapsed almost 5 years back now. It was at one point the second largest airline in Germany, but it had been struggling for a long time, and it ultimately ceased operations at a time when the rest of the industry was enjoying record profitability, and fuel prices were at record lows. But still, the company or Air Berlin struggled to take advantage of that, and that's down to various factors. And we'll kind of keep turning back to Air Berlin throughout this presentation and just look at some of the red flags there. So from a financial perspective, when we are first looking at their financials, I've just put together a small table here, and as I mentioned, there's a lot more ratios that you can look at, but ultimately some of them can tell you the same thing. So I mentioned earlier about leverage, which is basically the first highlighted ratio here, which is adjusted net debt to EBITDA. We mentioned that anything about 2 or anything below 2 is considered healthy, and as you can see in this table, it's been at least 6-7 times, and then ultimately it just became a very unsustainable number towards the end, or the year before it actually folded. So that's one red flag. An airline having too much debt compared to how much it was earning, and if you look at the EBITDA margin, which was mostly below 10% for the 3 years before it eventually folded. So again, it suggests that the airline is struggling to make money on its operations, and especially coming at a time when the rest of the industry was making record profits. Then we look at another ratio just highlighted there is the break-even load factor, which, as the name suggests, is how much load factor or capacity utilization is needed to break even. Now, this looks at the airline's cost base and its revenue, and as it says, shows in most years it was about 90%. Now, that's quite a challenge for any airline. So even though it had load factors of mid 80s, which is good by any standard, because it had such a high cost base, even that was not sufficient. So that was another red flag, which highlighted the challenges the airline was facing. Cash flows were negative for most of the recent years before it folded. Equity, which is the difference between your assets and liabilities, was negative. So that's another red flag. So yeah, just highlighted a few metrics there to illustrate that point. And Air Berlin is just one example. So just looking at a few other names here, I think almost all of them, all of them have sought restructuring during the pandemic or required government support to keep them afloat, and they were, as the ratios show, they were all having unsustainable leverage, or basically having too much debt compared to how much they were earning on an ongoing basis. So, and when a crisis like this happens, when within a span of 2 or 3 weeks, revenues completely dried up, it becomes very difficult for companies like these, which already had a lot of debt on the balance sheet, to be able to service that. The only other option is to borrow more debt to service existing debt, and ultimately even that becomes difficult because finances would not be willing to lend money to an already in debt carrier. So that's why kind of this net debt to EBITDA or leverage ratio is one of the most critical financial metric look at when doing these credit reviews. Then, I mean, the financials are important, but they're just one part of the story. And this is something we, when doing the credit profiles at Ishka, we are very we give equal importance to all these qualitative factors, which we'll cover now in the upcoming slides. So, starting with business model and its strategy and route network. Um, Usually an airline strategy or its or the kind of aircraft it has and whether they suit its route network, and or the macro situation in the market in which it operates, or the quality of its management team, or even shareholders play a big role in the airline's credit worthiness, and the financials are backward looking. They are a reflection of all these other qualitative factors. They are a reflection of the strategy and the macroeconomic situation and the quality of the management. Now, again, just highlighting an extract from Air Berlin's presentation, and they're just trying to show their strategy, and it suggests that they were trying to cater to all the segments of the market. So long haul, leisure, business, short haul, leisure, business. Now, that itself is quite complicated, and even though there are other airlines which do that, you would rarely find one airline brand catering to all segments of the market. So even if you look at IAG in Europe or Singapore Airlines, what they've done successfully is set up different brands which cater to different segments of the market, and so that they're able to manage their cost base and overall business strategy efficiently. Air Berlin tried to do something, but ultimately its strategy was just too complicated, and I mean, even before this strategy, they for a while they tried experimenting with low cost business. So they made frequent changes to strategy. So that's what we're trying to understand, how foolproof an airline strategy is, and whether it's, if in an emerging market, intuitively speaking, or just looking at the experience so far, we've seen low cost airlines are in a better position to target all the growth that's happening. So we've seen that in Latin America, we've seen that in India. So when we're looking at the market and the airline strategy, we try to look at how it compares with the market that it operates in, and the existing players in that market, and what's their relative strength, and how long they've been in that particular space. And usually there are relatively few barriers to entry. So in an growing market, there is always a risk of excessive competition, and we've seen that in Southeast Asia over the past 5-6 years, and that's been one of the main challenges facing airlines there, and that's why we've seen so many of the airlines from the region in financial difficulty. Um, of course, domestic and international, and that's been uh, of even more greater importance during COVID times. And airlines which have had access to a domestic market have uh, performed better than those reliant on international traffic. So it just shows how each individual aspect of its strategy or market can impact the airline's performance, especially during a crisis like this. Um, Talking about strategy, like is the case during most crises. Even the pandemic has forced airlines to adapt, and this particular image shows how initially airlines were using even passenger uh, cabins to transport cargo, and that was in response to the greater demand for air cargo and the significant rise in yields because of the decline in wide body international capacity. So airlines adapted and responded. Um, uh, and Here we've just presented certain metrics from two airlines from Asia Pacific, uh, which were reliant to a great deal on international traffic, but have been able to capitalize on their domestic export markets and have virtually become cargo airlines. And compare that with British Airways, which is a premium long haul international airline reliant on primarily on passenger traffic and doesn't have a dedicated freighter fleet. So as it shows here in the last table, our scores for British Airways have seen a significant decline in comparison. Both China Airlines and Korean Air have seen relatively limited or no decline. In contrast, Korean Air actually has performed better during the pandemic than it did before the pandemic. So it just shows how the crisis can open up opportunities for airlines which in the past struggled. Other than a pivot towards cargo, one of the other trends we've seen is a greater emphasis on low-cost leisure business, and just highlighted a few names here. And Aeroflot, ANA, Japan Airlines, Air France, they've all there has been growing importance. Excuse me. There has been all these full service carriers have invested a great deal in expanding their low cost businesses. Of course, now the Aeroflot group is facing completely different challenges, and now there are kind of significant question marks on their strategy. But before this, the events in the past few weeks, Aeroflot and Pavida and Russia's domestic market in general was probably the strongest performing domestic market in the world since the first trough during the pandemic, and the traffic levels had exceeded pre-pandemic levels on the domestic segment, and a lot of it was down to Pavida, which is their LCC unit, which was able to capture the low cost or the leisure traffic on a domestic level. Uh, and what Aeroflot did is transfer quite a few aircraft to Babida. And what we're seeing a similar situation with the Japanese brands as well, both ANA and JAL. And likewise, Air France and Transavia in Europe have announced greater investment in the LCC business. Apart from that, then there's been a lot of M&A activity. Obviously, the biggest one, which is still undergoing regulatory review, is the merger between Korean and Asiana. But we've seen partnerships or closer integration between major full-service premium brands like Emirates and Etihad, who are now tying up with the LCCs from the region. Similarly, American, a full-service carrier, is keen on investments in JetSmart and Gold, which are LCCs in Latin America, and likewise Avianca, which sought Chapter 11 and restructured. There have been reports of a potential acquisition of Sky, which is another kind of low-cost brand in Latin America. And even Avianca by itself has said that it will be more a low-cost or low-fare airline, which again makes sense coming out of the crisis. There has been greater demand for low-cost travel, and that's been a segment which has been quickest to recover. And as I mentioned earlier, in an emerging market where there are people flying for the first time, cost would be one of the main considerations. So that's where the appeal for LCC or low-cost leisure businesses comes from. And beyond that, recently we've also heard potential or merger plans between Spirit and Frontier and the US. And WestJet and Sunwing in Canada. So again, it's an expected byproduct of a major crisis in a relatively smaller market. People have companies would come together to extract synergies. So that we are seeing here. I think we have a comment here from Pablo. Yeah, so I agree. I mean, I've not flown them, but based on what we've seen and read, it's equivalent to an LCC in most ways. So again, the Chapter 11 restructuring gave them that opportunity to address some of the long-term issues that they had, and they've been able to reduce their cost structure and hopefully compete better with the other airlines in the region. Then moving on to shareholder influence. During the crisis, government support has been one of the main determinants of credit risk, and governments have provided significant bailouts to airlines, and that's been one of the main reasons why airlines have the airlines that survived were able to do so. So obviously that's an exceptional circumstance, but generally what we're trying to understand is whether there is any prospect of government support or any major corporate support, whether the airline has any shareholder or which is in a position to provide support, whether past instances of past support, whether there is evidence or how important the airline is from a strategic perspective, the airline's the shareholders' own credit standing, and the likelihood of them providing ongoing support if the requirement is, and conversely, if there is there are incidents of shareholders trying to extract resources out of the airline. So shown a few examples here, and HNA again fairly well publicized examples. So Hainan Airlines was a fairly well performing airline, but ultimately, as we know now, that because of the governance issues at HNA, a lot of its cash flows were eventually used for acquisitions elsewhere, with the parent company loading up debt on the airline. So uh, it's important to identify and understand whether that is happening as well. Um, as I mentioned, government support has been one of the main kind of credit uh, risk determinants during the crisis, and this slide just shows the markets which have received some form of support. Um, Obviously, there are big gaps in Africa and even some in Latin America. And what this doesn't show is the level of support, but the developed markets were in a position to provide significant, relatively sizable bailouts to the airlines. But excuse me, but the same level of support wasn't available in other emerging markets and developing markets of Latin America and Asia Pacific. So, and that can be understood even in Africa, which where there are limited financial resources to support the broader economy, let alone providing private businesses bailouts. So that's made a difference on the credit quality of companies operating in those regions. I mean, if you guys get a chance, there is a lot more detail on this topic on our website. So it's an useful analysis to review that. Um, uh, the question is, I mean, as I mentioned, over $200 billion of support has been provided, but and airlines themselves have raised a lot of capital. Um, but the environment remains challenging, and it, in particular, in the past month, because of the rising fuel prices, and even though, even though Omicron affected uh, had a negative impact towards the end of last year and early this year, it it appears most countries are easing those restrictions. But now that we have this new situation, and the impact it will have on direct impact it is having on fuel prices, and potential for escalation and the travel sentiment, uh, means that just airlines' ability to generate positive cash will be pushed back that much further behind. So uh, understanding how much, again, going back to the what we mentioned in the earlier slides, available liquidity becomes very critical, and identifying and understanding how much reserves there are, and how that compares with their near-term commitments. And a lot of the airlines here on the left, which have fairly good reserves, they tend to be from developed markets, whereas towards the right, which have relatively low reserves, are are are, are from emerging markets. Now, this is from June 21, but we don't have data for all airlines or most airlines from December. So the situation might change, but in general, the North American and European airlines do have better liquidity than their peers in other markets. Um, we'll cover fleet in more detail in the upcoming session, but just from an airline and credit perspective, uh, the what we are trying to understand is the composition of the fleet and how it suits their route network and its business model. So airlines which tend to have too many different types of fleets, uh, um, it makes it more complicated. Their overall operations become more complicated, and thus increases the cost structure. So we're trying to look at how that uh, whether there is too much complexity, and whether airlines have a logical fleet setup compared to its route network. Then quickly on management team, again very important. Trying to understand who the management team is, and how long they've been with the airline, and their track record, and how they've performed, especially during times of crisis, and um, uh, especially looking at when looking at government-owned airlines, whether the management has relevant aviation expertise, or even relevant corporate expertise. But generally, what we've observed is they tend to be civil servants, which who tend to move around very frequently, which makes it difficult to establish a system. And managing an airline is quite complex. So having a revolving door management is usually not very is not a good sign, and that is something we most very often see with government-owned airlines. Um, One of the final points, macro. Obviously, it's a major issue in current times. What we're seeing in Eastern Europe and Russia, and the direct impact it has had uh, on 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 the overflight access, with each with Russia limiting access to their airspace, and likewise most other countries limiting access to Russian aircraft. Other than that, the direct impact of that on certain airlines would be having to reroute their network, which will add to cost, and which will, in an environment of um, increasing or high fuel prices, that just makes it even more challenging. Beyond that, um, the impact of all the sanctions on the economy is also threatening to significantly undermine the domestic aviation space in Russia. And other than that, on a generic level, when looking at the macro situation, understanding the infrastructure in the country, or um, availability of airports, or availability of pilots, or supply of pilots, what level of general government support there is towards aviation, and whether there is investment in building up country's infrastructure. Then, from a regulatory perspective, the how open or closed the country is with respect to aviation agreements, the political situation in the country, um, which can eventually lead to significant negative impacts, economic impacts, and even impact flying. Then, of course, any other exogenous shocks, like earthquakes, or prone to natural disasters. And of course, we've seen the impact of the pandemic in over the recent years. So um, that's some of the things we try to review in the macro, when doing macro analysis. Um, Environment is obviously an increasingly important topic, and the aviation industry's role is now increasingly, there is greater scrutiny, and because it it is a carbon intensive industry. So what we have seen in many jurisdictions is a significant impetus towards driving or instituting policies to aimed at reducing the industry's carbon footprint. And I mean, some of the examples here in Europe, we've seen with the European Green Deal, as part of which we have the Fit for 55 and Refuel EU proposal, which aim to reduce the industry's or transportation sector's emissions. And as part of that, within for the aviation space, there are measures to make increase the taxation on conventional fuel, while at the same time incentivize greater use of biofuels. And you'll hear a lot about sustainable aviation fuels in the coming years. So that's happening in Europe. Similarly, there are measures to incentivize greater SAF usage in the US, where they're looking at tax credits to make it to incentivize greater use of biofuels. But ultimately, what the impact of this is on airlines, they will have to comply to regulation, and but other than that, other than regulation, airlines which are not seen to be taking steps to address the climate impact also risk losing customers, which are increasingly more aware and more demanding of the services that they consume. So it's not just an ethical or business or a compliance issue. It's even a business issue, and that's why we've seen many airlines coming up with policies to highlight what they're doing to reduce their carbon footprint. Now, of course, some of it is still quite preliminary, and it can be superficial in some cases. Ultimately, as we in the coming years, as there is more regulation, it will have an impact on airlines. So airlines that are well prepared or have that have the necessary processes in place or are taking steps from now itself, they'll be in a better position to manage this going ahead. A quick roundup of what's happening in the industry in over the past 2 years and of course recently. Now these two charts demonstrate capacity trends since January 2020. Obviously, separated by international and domestic. Now, it's clear from the chart on the right that a lot of the domestic markets have seen strong recovery, especially in the US. In Asia Pacific, we've seen a bit of volatility, especially in 2021, but very often they've returned back to pre-pandemic levels, and then we're seeing similar trends in the US, in Latin America, in Brazil, Mexico, which has benefited from its relatively loose travel policy and its close proximity to the US. But similarly, as I mentioned, the two major markets, Russia, firstly, is now facing significant uncertainty, and at a time when the rest of the world is now opening up, we are seeing a significant increase in the number of cases in China. So that is also expected to add to the volatility or the recovery levels there, and that will undoubtedly have an impact on air travel because of the lockdowns, which are now more widespread than they had been since the first wave. So this these lines are likely to remain quite volatile in the near term. But as I mentioned, there is recovery happening in many of the other markets which are now loosening up. What will be critical this year would be how the international segment recovers. And again, there are optimistic signs with many markets completely doing away with any form of restriction, and so that's hopeful. But how it will also depend on how this Russia-Ukraine situation develops. Um, Financially, the uneven recovery has impacted the financial performance of airlines, and we see a big trough there in Q2 2020, which was almost above 100%. So airlines EBIT losses were more than 100% of the revenues, and as if we that was kind of the worst. And since then, losses have been trending downwards. We don't have, as I mentioned, we don't have Q4 data for all airlines, but we might potentially see a dip again because of the impact from Omicron towards the end of last year. But positively, in general, what we saw is 2021 was relatively better, especially for airlines in the US and Europe. They were also able to take advantage of the government support and the grants that they received, and of course, having access to a large domestic market meant relatively or less restrictions, travel restrictions compared to traveling on the international segment. In contrast, Asia Pacific's performance was worse in 2021 than 2020. We saw Southeast Asia impacted significantly for most part of the year. Then even China, there was significant volatility throughout the year, which prevented, even though demand was quick to return, the volatility made it difficult to generate positive cash, and as a result, airlines remained in the red at an EBIT level. There were some exceptions though. Again, the cargo airlines or airlines which were in that export markets, primarily Taiwan and Korea, were able to capitalize on the demand for increased goods and especially high tech goods that are exported from those markets. And those airlines essentially behaved like cargo carriers and generated significant profits during that phase. On a balance sheet level, looking at net debt to equity, again, it appears as if there was we hit a peak of the deterioration in the first quarter of 2021. But again, now with the events unfolding in Europe and the rising fuel prices, organically repairing the balance sheets. I mean, if we look at the ratio before 2020, it was below 2. Again, a lot of it was driven by the US airlines, but that has deteriorated by nearly 3 times. Now, getting that back down to pre-pandemic levels on an organic basis will require sustained profitability, and that in the near term that is being threatened by all the geopolitical developments, and even um, in the Omicron wave, which is passing through different countries at a different time. I mentioned fuel prices, and I mean, it is traditionally the largest cost item for all airlines. Usually, at least 30% of their cost structure is fuel expense. So, considering the extent to which fuel prices have risen, especially in recent weeks, and how quickly they've or how volatile they've been, it is very challenging to manage such volatility, and because we're still in a situation, at least in most markets, where demand is just slowly starting to recover. Airlines do not have the pricing power to or immediately pass on those higher costs to the consumers, or they risk losing demand. But um, we mentioned in the earlier slides about risk management and hedging. So because most airlines had abandoned hedging due to or cut back on hedging due to the losses sustained during the pandemic. That kind of was an added concern, but we're now seeing many of the European airlines have reasonable hedge levels, and some that had given up, like Wizz Air, have also now been uh, uh, forced to resume hedging their fuel charge expenses. In some situation, in some markets, airlines are able to add fuel surcharges, but and pass on those higher costs to the consumers. But as I said, that also carries the risk of disincentivizing demand, and just these fuel prices are now complicating and will significantly affect how quickly airlines can return to cash flow positive. And after the losses incurred over the past 2 years, there is now limited capacity to absorb more losses. So at some point, yields will need to respond this year to cover for those costs. And because there is significant pent-up demand, airlines might be in a position to capitalize during the peak travel season. So we might see some fluctuations in fares this year, or very likely increases in fares. We've already seen announcements by some airlines to reflect that. But uh, it's what will also impact this is the recovery on the international sector, which is where most of the jet fuel is consumed, and how that recovers will also impact airlines' strategies to mitigate this volatility, which also depends. There are other factors to consider as well, including bank fees for hedging, average fleet age, which, because a lot of the airlines have retired older aircraft, that has improved in most cases, their market position and ability to set fares. So an airline with strong competitive position will have that tool as well to manage this volatility. Um, this is this is a summary of some of the airlines that we cover on the airline credit profiles platform, and we've just plotted that by financial risk on the y-axis and government support on the x. So what happened initially during the crisis is, or in the first year, a lot of movement from the bottom of the chart or from the middle of the chart towards the right, and it's probably not a surprise that there is greater concentration of airlines on the top, and a lot of the airlines also move from the top horizontally depending on what kind of government support was available. And airlines which are in that top right-hand corner clearly are at most risk. There have been some changes there, and like Hannon and Lucky Air, which have completed one part of their restructuring, but still we are kind of they're still yet to complete their organizational restructuring. So there have been movements even on the downward or improvement from a high risk to low risk, especially in the US, which where the market has recovered well, and there have been some IPOs and capital raise, which has helped to reduce the risk levels of airlines. But this is an ongoing something that we update on an ongoing basis, which quickly helps us to identify where an airline sits and how it's moving. In recent weeks, we've lowered our view on the Russian airlines that we cover, as can be understood. To conclude, we've seen quite a positive recovery in 2021, and even now we've seen after the Omicron wave, which impacted demand patterns for a while, but we're now seeing demand returning quickly in many markets. But the emergence of this new crisis is now complicating that recovery profile, and certainly the risks have increased on many folds. In the near term, how the Omicron wave kind of progresses in other countries, especially in countries where vaccination levels are low. But what that shows is that the pandemic remains an active situation, and I think we've heard from most scientists or experts in this field that there will be new variants. So it won't be a smooth recovery by any means, but clearly vaccinations are the key, and experience over the past 2 years, or especially from last year, should help countries apply that, especially on the international segment. And we're seeing many governments now adopting a more relaxed approach when it comes to international travel. And that is based on the experience over the recent years. Ultimately, still, airlines which have a large domestic market are in a better position than those who don't. And there will be a lag. So as traffic recovers, well, the first priority for airlines is to ensure their planes or their aircraft are full. And the next stage would be to have a sustainable and profitable operation. And after that, we'll get once you have profitability on a sustained basis, we'll get an improvement in balance sheet. All the aid that has been received will need to be paid back at some point. Again, many airlines have started doing so. In some cases, we'll see airlines that aid being converted to equity as well. But yeah, the situation with the pandemic, which as we've seen remains ongoing, as well as these new geopolitical developments, means higher fuel prices, means volatility, and the challenging setup. Airlines will continue to be challenged by these situations. So maintaining appropriate or sufficient liquidity positions still remains one of the most important risk management tools. And from our perspective, that also becomes one of the most important metrics uh, to monitor, and along with all these other um, factors that we've considered or discussed today. Um, I mean, the airlines are a critical component of the industry, and it's their financial performance is critical to or important to the overall well-being of the finance and leasing industry. So it's understanding how the quality of credit is important in structuring an overall transaction, and that's true for a lessor, a financier, or any investor to identify. There's no good or bad credit. It's just identifying the risk involved and pricing that risk appropriately. And as we mentioned, financials are important, but all these other qualitative factors are equally important when doing the credit review process. And ultimately, the decision to invest or lease or finance comes down to the risk appetite of the investors and the financiers. But that's why it's important to be able to identify what the risk levels are. I think that's it from my side. I'm happy to take any questions if there are any right now, or if you guys review and have any follow-up questions later, that's okay with us as well.
That's brilliant. Thanks so much, Sid. We now might be a good stopping point for a break before we go into the second half. And then if you have any questions, you guys, in the meantime, while we're on break, you might just type that into the chat box there, and then we can address them as once we come back. Does that work for everyone?
Yeah.
I usually like breaks, so. Okay, so why don't we come back at 19:55, so 7:55. Does that work for everyone? I know he can get stuck into the second half. Perfect. Okay. So we'll see everyone in a few minutes.
Thank you.
Thanks again, Sid. Really
No
appreciate
problem.
it.
Thank you. Thanks for listening.
we might kick on with part two now. Eddie, the presentation's up. You should have control of it as well. Are you taking this one, Eddie? Or is Stuart or Paul, one of you guys want to kick off?
I think Paul is kicking.
Yeah.
Okay, perfect.
Start my camera up here.
You can control the PowerPoint, right?
Let me just check. Oh,
On the bottom left there.
no, I can't.
Cannot.
Ooh, what was that?
That was me. I've given you. Let me give you. You should have presenter controls. The bottom left with those two arrows there.
Got it.
There we go.
Yeah.
Okay.
Thank you. So yeah, I'm going to talk about aircraft appraisals, how to prepare, what factors we consider when making an aircraft appraisal, the role they play in aviation finance, and some of the challenges and limitations that exist in the aircraft appraisal business. This section is split into two, so I'm going to do the first part, which is kind of talking about the high-level concepts of different valuation types and how the appraisal is made. And then Stuart will continue on talking about how those kind of first cut appraisals are adjusted to get a specific appraisal value for an aircraft, depending on the aircraft, the specific aircraft specifications and maintenance, which is, a huge factor, potentially even bigger factor, given that the value of engines and how their value is determined by maintenance status. And I think Eddie would finish off talking about the market in general. So I'm assuming most of you guys will work for lessors eventually, so we'll try and focus on the appraisals from the perspective of a user. What would you expect, or how would you handle an appraisal report if it's given to you? What strengths and weaknesses it has, what is it good for, and what is it maybe not as useful for? The role of the appraiser in industry, and just to remind you that please ask questions if you want to. I make this more interesting. If you have any questions or issues, I'll keep an eye on the chat and try and answer as I go along. So I think a good analogy for appraisal is the same as in real estate in the housing market. If you're buying a house, more than likely you're using finance. More than likely the bank will send someone to appraise the house before they agree to give you the money to borrow to purchase the house. They'll want to get a comfort level that the house is worth what you're paying for it. And they'll probably also have covenants like loan to value ratios that they will want to maintain. It's the same in aviation finance. Most of aircraft are financed by debt. The lenders want to make sure that the aircraft maintains, the value of the aircraft maintains certain loan to value covenants, and also that they maintain those values throughout the life of the loan. This is even more true in securitized products, such as an ABS deal, where there could be several aircraft in a deal packaged together and securitized. The investors in that ABS want to make sure that the combined value of those assets throughout the life of the ABS maintain certain covenants in order for the ABS to maintain its rating and the value of their asset to be protected. Things worth noting about the appraisal industry in general is that obviously there's two sides to every deal. So there's a buyer and a seller. They probably have different ideas of what the value might be. So from the appraiser's point of view, the independence of the appraiser is a critical factor, and ethics is a factor that's a lot of focus is put on. That the appraised value should be explicitly clear what is the use of the appraised value, the assumptions the appraiser made and get into that value, and that the appraiser has no interest in the transaction or doesn't hold any similar type of assets. So the appraiser should always be completely independent of the asset it's appraising. So we'll flip on to the next slide. So here's the function of the appraiser. It's to help verify or establish the buying or selling price of an aircraft. Should be independent. Their value of their version of the current market value of an aircraft asset It provides a basis for decision making, and to assist the purchaser or the seller to establish the value of the market. It's also for insurance. It's important that an asset is not over under insured. Yeah, this is you can read the rest of the items there. But it is basically it's a third party providing independent view on what is the current market value of an asset. So the factors influencing aircraft values. Here we have the manufacturer who made the asset. Obviously, is dominated by two major OEMs. There's a market, the regulatory environment, the aircraft spec. So the age of the aircraft, where is in the production cycle? Is it early, late stage in the production cycle? The liquidity of the asset, number of variants, operating economics, payload range. Payload in particular is something that people pay for, almost per ton. And secondary market options. So just to talk around some of these points, obviously most aircraft are made by one of two manufacturers. That provides a lot of liquidity in the market. So if you buy a Boeing now, there's a very good chance that Boeing is going to be a popular brand when you go to sell the aircraft in 10 years. That provides financiers a certain amount of assuredness that there's going to be a market for the aircraft when it comes time to sell it, and that it's a popular asset, especially that there's a reason why narrow body assets are most popular with lessors. They're very deep market, very liquid markets, huge number of users. Regarding the family variants, currently the fact that a 320neo has several variants already in production is helping that a lot, because if you have as an airline, you want to operate the same type of asset. So if you're going with Airbus, you can operate the 320 or 321 or 321XL, and pretty soon the 321XLR. Whereas Boeing right now have had an issue with they don't have as many products in the market in their max range. The max 10, max 9, the max 10 and the max 7 are not in production yet. So that's kind of a negative factor right now. It's depressing values of max aircraft. And then on the flip side, what Boeing does have going for it is freighter conversion. So for older NG 737 NG aircraft, or maybe 8 to 16-year-old aircraft, those values are being supported by the fact that they can or could in the future be put into a conversion program to be turned into a freighter. An option that the 320 doesn't really has in theory, but there's not many being built at the moment, not many being converted at the moment. So that's depressing values of 320s, midlife 320s. So all these are factors that are very important to consider when the appraiser will consider when they're valuing aircraft. Next, we have the valuation scenarios. There's the kind of the standard scenario would be the current market value, but that is got to by considering the standard market value is the current market value is determined by a generic maintenance status of mid-time and midlife. As I mentioned previously, the maintenance status of the aircraft has a huge impact on the value of a specific tail, depending on how the engines in particular, or what condition the engines are in, if they're worn out or if they're fresh from a shop visit. So the generic value methodology we use is a mid-time, midlife. So everything's a theoretical halfway through its useful life. So in an aircraft, there's the airframe, the engines, and the landing gear are the main things that are kind of expensive to overhaul. So we consider a starting point to be for a midlife aircraft to be mid-time, midlife. And then this can be adjusted to the actual life of the aircraft, the actual maintenance situation of the aircraft. So that's an unencumbered asset, which is just a standalone asset. An encumbered asset would be placed with an airline, with an operator. There it's slightly more complicated because you have to take a view on the credit rating of the operator. How good are the maintenance payments? How much are they paying every month, and how likely are you going to get those payments? Regarding what Sid talked about, the likelihood of the airline succeeding and not having any financial issues and being able to make their payments, and also the residual life of the asset at the end of the lease. So we're going to talk a bit now about definitions. The ISTAT is the appraising body that kind of sets the rules for how appraisers should appraise aircraft. They're the certifying body for most appraisers to be, for an appraiser to be accepted by a financial institution or an insurance company. The appraiser will normally have to be ISTAT certified, and ISTAT will set the rules of how they should go about making their appraisals. I got a question there. You need to not are till not mature. I think the question there is that the neo engines, many neo engines, would not have reached the limit of their life. I think that's the question. So does it affect their appraisal value? If I understand the question correctly, the engine OEMs will produce a guide for how much it will cost to replace the LLPs, and also for a restoration visit, a engine restoration shop visit. So based on that, appraisers can use that to kind of determine what one cycle is worth or what one flight hour is worth, and based on that they can take a view on what the aircraft is worth at this particular moment in time. Okay, so yeah, in that case, if LLPs have a reduced life, that would affect the value. Yes, I mean basically from a maintenance point of view, Stuart will go into this in more detail in his section, but briefly, every time the plane takes off, you're impairing its value. I mean, each cycle has a specific dollar amount, basically, in the hundreds of dollars, and every flight hour you put on the engine, it does affect the value of the aircraft.
Yeah, Paul,
so yeah, it affects the LLP.
Yeah,
Go on, Stuart.
yeah, I mean, in terms of evaluation, you're right. Yes, obviously, when aircraft introduced to service, sometimes they don't have what the manufacturer considers their ultimate life. What obviously the design goal is for a specific part. So they're introduced into service with lower life limits. Again, from a valuation perspective, we work on what would be the then current Chapter 5 limits. So yes, if a part introduced into service has an ultimate goal of say 30,000, but it's actually introduced into 20,000. We basically value it on the basis it has, it is 20,000 until we know otherwise. Because yes, it may go up, but we don't know if it will go up and when it will go up. So we work obviously on the kind of on the basis that that's what it is today, and that's what we're valuing today. So we work around the current Chapter 5 limits as they stand at the point of valuation.
Lovely, thanks for that explanation, Stuart. So going on with the definitions, there's two basic definitions that we use. One is the base value and one is the market value. We're going to start here with the market value. So a market value is the value ascribed to an aircraft that can be best achieved under open market conditions that exist at a given point in time. The market value reflects the following. It is a spot trading price at a given point in time, single aircraft transaction, or cash equivalent. There's no volume discounts. It takes into account the market conditions relevant at a given point in time. It importantly assumes there's an open balance of supply and demand. Sorry, it may take into account the current imbalance of supply and demand as perceived in the market at the time. And it is an open sale, arm's length transaction between two independent, willing and knowledgeable parties, free as lease or charge, and allows reasonable time for marketing. So this is the market value is what you would get for an aircraft if you sold a single unit aircraft to an unrelated party, where both parties are assumed to be quite knowledgeable about the asset. No one is getting a poor deal, and the seller has that reasonable time to offer that asset on sale and will ideally get a good price for it, a fair price for it. So this is kind of the valuation that is most commonly used in day-to-day situations. If we flip on to the next one, the base value. Base value provides a way of normalizing the effect of market volatility and allows a comparison of different aircraft value sets constrained by a definition. And the base value is defined by, as I said, the long-term underlying economic value of the asset. It assumes the supply and demand is in equilibrium. Again, the rest of the items are quite similar. It's willing, knowledgeable buyer and seller, arms and transaction, acting prudently, absence of duress, adequate time for remarketing, and open market. So this is the kind of historical trend of the value of the asset. This the base value. I'll show you the next slide here. You can see how base value and market value interact. The base value is generally determined by establishing the economic life of the asset, which could be 20 to 25 years, depending on what assumption the appraiser makes. And it will terminate at a value that could be 15 or 20% of the initial value. And it will chart a pretty smooth curve, depreciation curve that was going down. So that should smooth out any of the realities of the market during the lifetime of that asset. And that base value is the fundamental starting point for any valuation. So, barring anything changing, any major factors changing during the life of the asset, that is how the appraiser would view the life of the asset evolving. Then the market value is the blue line, and that should, if done correctly, oscillate above and below the base value. So if there's a shortage in the market, shortage of the asset in the market, people will pay more to get it, more than the base value. And if there's oversupply in the market, people will pay less than the base value. But it should, the market value should generally return over the long term to the base value. So in recent times, obviously COVID caused oversupply of assets in the market. It was very difficult to sell wide bodies in particular recently. You could even argue there was no market because there was very few trades made of some particular asset types. So in that situation, it's very hard to give a fair appraised value because there is quite a lot of stress in the market, or there could be no market at all. There could be no people trading. People could be offering aircraft for sale, but no one wants to buy them at the price they're offered at. So in that situation, that's when the base value really comes to the fore. As an investor, you should think of comfort in the fact that no matter how bad the market is now, it will return to its base value over the long term. That's why you should probably not really change your base values dramatically during a short-term, though drastic, ultimately short-term situation like COVID. Some factors that would generate a change in base value would be if there's a sustained increase in fuel prices. Less fuel-efficient aircraft could be penalized. If there's a change in regulation, for example, a carbon tax, that would penalize more heavily less fuel-efficient aircraft. That would justify a permanent downgrade of a base value of a less efficient aircraft versus a more efficient aircraft. But other than that, the base value should be fairly stable, and then the market value is pitched, kind of anchored around that base value, slightly above or below, depending on the actual imbalance of supply and demand, as seen in the market at the time of the evaluation. So our next slide here this is how the appraiser would go about getting to a market value. A lot of it is down to talking to people in the industry. Us in Ishka, we would make several hundred phone calls a year to market participants, to financiers, to lessors, to traders at all stages of the aircraft's life. So from people involved in sale leaseback of new transactions to OEMs we talked to, right down to people who are buying aircraft as feedstock for freighter conversion, people who are buying aircraft for part out and tear down, so they're not buying it as a flyer, they call it. They're buying it to take it apart, sell the engines, sell the airframe, sell the other parts. So by making these phone calls, by talking to people who are actively trading in the market, you're able to collect a large amount of raw data, and then we have the kind of the expertise of the appraiser is added to that to see which data points are maybe most reflecting of the true situation in the market, and then they come to a generic half-life value. And once that generic half-life value is determined, then you can adjust that depending on the specific spec or the specific maintenance condition of the aircraft. Another method of getting to your kind of starting point for market value is to look at how much an aircraft can earn through its rents, and also looking how much you can earn the airline, so how much yield the aircraft or revenue the aircraft can generate by flying the aircraft. So these are kind of complementary methods you can use to triangulate the value of the aircraft. Another example would be to use comparables. I mentioned the MAX 10 before. That aircraft is not flying yet. It's difficult for appraisers to put an exact value on it, but the Airbus product, which is most similar to it, would be the 321LR. So that is flying, so that would be a good guide for what the MAX 10 value should be when it does come out. The next slide here we have, this is a typical output of an online valuation with the Ishka's own platform. We have an online valuation where you can go online, you can enter the aircraft type and variant, the aircraft vintage, you can forecast your own inflation rate, and then you can specify the max takeoff weight and the type of engine. And based on that, again, based on our proprietary values and models, it will give you the base value, the soft market value, peak market value for a half-life and for a full-life aircraft. That refers to its maintenance condition for this year and for 10 years into the future. And now we come to forecasting value. So we see on the last slide here, we've talked about the current value. All of the data points below the current value are future values. The relevance of those future values is that a lot of aircraft are on lease. So if it's a 12-year lease, and as a financer or even as a lessor, if you decide to invest in a certain asset class or asset type, you'd like to know what the value of that aircraft would be when it comes off lease in 12 years' time. When you're building a DCF to determine the value of the deal you're looking at, the residual value of the aircraft in the future is very important. That's why future values are play an important role. Then we have downside valuations. You saw that in the data that Ishka produces. So in the case of a bad market, investors would like to know what is the soft market value or the stress market value of an asset. This happened during COVID just now. Situation like that happened periodically, as we can see in aviation. Another one is happening at the moment with the situation in Russia. So it's important to know in a bad market what is the downside exposure of an asset. What we saw in COVID is somewhat typical of what generally happens, is that the more specialized the asset class, the more it's going to suffer. So a good example is A380 is very few carriers fly that aircraft. It's totally dependent on a certain type of traffic, very long distance, wide body, huge volume traffic. It's highly illiquid, very hard to remarket. So those values suffered a lot. Whereas in narrow bodies, the method that kept flying, demand for narrow bodies kept quite strong. So those values, though they suffered, didn't suffer quite as badly. So the question, Pablo, I'm assuming you're from Colombia. I used to work in Avianca for several years, just based on I've been reading your questions. Good to meet you. Latin America yields here is down far lower than you're considering the valuation. Yeah, so that's probably more a question for Sid, and a question for the credit rating. So yeah, yields are lower. So if we're looking to the future now, what a lot of aircraft appraisers will be looking at would be interest rates. So interest rates look like they're going up. We're coming out of a kind of historically low interest rate period. So what would higher interest rates mean? It's higher cost of capital. Aircraft will have to increase in price. Aircraft rents will have to increase to cover the increased cost of capital. And then secondary effects of that would be probably the US dollar will get stronger as its interest rates go higher. I know in Colombia, we'll speak about Colombia specifically, they've already been suffering high inflation. It's called imported inflation from the US, since they import a lot of products from the US. So they've already been increasing their own domestic interest rate quite aggressively to get out ahead of that. Regarding your specific question, then it's just how big a market is that in terms of the global aviation market. So, and if developing countries' currencies weaken, that will decrease the capacity of these countries to lease aircraft. You could take a view of what aircraft would they typically lease. Would wide bodies be hurt more than narrow bodies? Which narrow bodies? I would say narrow bodies would be hurt more just by volume. There's far more wide bodies placed in larger markets, or markets that are, you could say, somehow protected, like the Middle East or China. And then among narrow bodies, what types, like how will the market, it's back to supply and demand, so how will that affect the demand of the specific asset class you determine will be most impacted? Will it have a significantly larger or negligible impact on the demand? And I think that's the best way to think about that. There's no ISAT defined definition for soft value. This is actually in the works right now. They've been 2 years trying to determine a soft value definition. It's nearly ready. I guess the key point is that it will just say there's an imbalance of supply and demand. There's excess supply over demand, but the newly minted, yet to be published, but just finished ISAT definition of soft value won't say how soft, which I guess is the key factor. So that's kind of left to the appraiser to determine, is that a 10% oversupply or a 20% oversupply, or in the case of COVID, it was much higher than that. So when you're looking at a soft value, it's important to understand the specific rationale or hypothesis that the appraiser used to get to that soft value appraisal. And downside valuation is the stress value of an asset. Is not necessarily a negative one. So there could be distress on the part of a buyer as well. You could argue that the MAX grounding caused the stress among current operators of 737 NGs, in that they probably had to keep flying those aircraft longer than they wanted to fly them. And that supported lease rates in the medium term, since if you were expecting to get MAX aircraft, you couldn't actually buy them for the past couple of years until, well, last year the supply started again. Yeah, distress value would be considered a valuation like that, or an imbalance of supply and demand. Shorter remarketing time. In bankruptcy, often a liquidator will put everything on auction, which is not really giving it a fair and reasonable amount of time to market the aircraft. Buyer and seller not willing, transaction not at arm's length. Any of these factors would constitute a distress value. And then encumbered value. This is probably one of the most important valuations. The standard definition calls for, as we saw, a single aircraft arm's length transaction, not under lease. But in reality, most aircraft that are traded, they are encumbered. It's either for the value is needed for a sale leaseback for a new aircraft, or an aircraft wants to raise capital and is using their existing aircraft, the aircraft they own, to raise capital. So they're securitizing those aircraft, selling those aircraft to lease them back, or they are being securitized and going into an ABS deal. This is a bit of a tricky valuation for an appraiser to do, because the appraiser's expertise is generally in the specific piece of metal he's looking at, so the actual aircraft. In order to do an accurate lease encumbered valuation, you must do a DCF, discounted cash flow, but you must use there's two different discount rates you should use. One is on the flow of payments coming from the lessor, and that goes back to what Sid presented on, so that the likelihood of getting paid by the lessor is determined by how strong the lessor is, how good their business is, how strong their credit rating is. And then you'll also need to discount the residual value of the aircraft at the end of the lease life. So there we spoke before about the future value. It's important to have an accurate handle on the future value. And then also you must use a discount rate, which in this case would be related to the cost of capital of the person providing the capital, so the lessor, the lender, or whatever it is. So from an appraisal point of view, you're kind of going away from looking at actual quality of the aircraft, condition of the aircraft, and the bigger determinants here are your view of the credit rating of the person providing the rent and the discount rate and residual value. Just a comment here as well is that the sale leasebacks at the moment for new aircraft, particularly for new narrow-body aircraft, for NEOs and for MAXs, are extremely aggressive, and by aggressive I mean very low. So a lot of sale leaseback deals done right now are just covering the cost of capital. So the entire deal, the only way the lessor will make any money out of these deals is by seeing some upside in the residual value. The lease payments that they'll get from the operator during the lease life will cover the cost of capital, but not a huge amount more. The actual return must come from a positive view in the lease life. That could be due to having a certain view about inflation in the future, or about the value of the asset in the future for other reasons. And just another comment here is not everyone is just looking at the aircraft. I mean, not every investor is just looking at the return they can get in terms of the lease payments and the residual value. There are a growing number of investors they could be looking for a tax shield. They could be looking for hard currency. Some Chinese investors are investing money in aviation at very aggressive rates because they want hard US dollar income. Or it could be a hedge against inflation. They're seeing an aircraft is seen as a hard asset that is protected against inflation. It should inflate at the ongoing inflation rate. So this kind of skews the market. Everything I've talked about has been how do you value the actual asset, but there are, as an appraiser or as a user of appraiser values, there are other considerations you consider, other factors that motivate people who trade in aircraft, which can significantly affect the value of those aircraft. This one is a bit of a cut out and keep. It's probably worth saving and keeping in your files. Just a review, a table showing the different criteria used for the aircraft, the parties, the market, and the transaction for each of we looked at three values: the base, market, and the stress. We don't have the soft value here, and that's not currently defined by ISTAT, but it's essentially the same as, excuse me, the same as market value, but there is a oversupply of aircraft. And that brings me to the end. I'm going to pass over to Stuart now for some questions. I'll pass it on to Stuart. So thanks for your attention.
Thanks, Paul. Yeah, I'm going to now step you through the next couple of sections. The first one being, as you can see on the screen there, specification. And then we're just going to move on to the maintenance side as well. So just covered in one of the first few slides of Paul's deck was the factors influencing a value of an aircraft. Sort of while the first sort of half dozen points, I suppose, deal with like the market, and these particular points are sort of almost inherent in the value of the aircraft. So in terms of the actual half-life value, but these particular areas in terms of specification and maintenance are obviously the actual the nuts and bolts to actually what differentiates one aircraft from another. So first of all, in terms of what add value in terms of specification, there's two parts here. The first one is the branding. So this is obviously what's mostly viewable to passenger, either obviously externally through the actual the paint scheme, obviously internally in terms of the outfit of the cabin, so the carpeting, the seats, the sidewall panels, and all this thing. It's actually what the actual passenger sees when they travel aboard an aircraft. The other side of it is obviously the operational side of it. So depending on the requirements of the airline, they have certain systems that they might need that other airlines might not. So obviously, if you're going transoceanic, or you obviously need certain communications, navigation equipment, compared to if you obviously it's the aircraft is typically routed on either domestic or short-haul flights. Other things obviously there, you've got things like short-field performance, so obviously going into challenging airports, various ones around the world. Again, you need certain systems for the aircraft to cope with that. And indeed, obviously, if you are operating in certain areas of the world that are, shall we say, a little bit chilly, again, there's certain requirements that you need to safely operate the aircraft. In terms of an appraiser's perspective, this is always something that's always has been sort of heavily debated with the industry. When you value an aircraft, what we're more interested inside is probably that second part in terms of the operational. It's like kind of the physical stuff, if you like, that sort of stays with the aircraft. So it's stuff that will survive between airlines. As Paul was saying, the market is heavily weighted towards the leasing industry now. Obviously, aircraft change ownerships and indeed obviously change operators as well. And it's these items that are in sort of on board the aircraft and indeed stay on the aircraft that sort of add long-term value as opposed to items such as obviously in-flight entertainment, cabin seats and so forth. You know, it moves from one airline to another. These things generally get swapped out. Certainly if you're switching between mainline flag carriers and even some of the secondary carriers, the low-cost airlines as well. Not so much, obviously there's a cost to it, which in certain cases, especially with Middle Eastern carriers, can run into several $million. But in terms of cost, but from an appraisal standpoint, it's a question of whether does that actually add value to the aircraft, and invariably that answer it is more sort of low limits. So the things we take into account typically when valuing aircraft in terms of specification, a few have been mentioned already in terms of operating weight. So a manufacturer basically defines a sort of a standard aircraft, if you like, and then the airline has the option there, or the owner has the option then to change that operating weight. So typically it starts with sort of a fairly low weight, and obviously the manufacturer then charges a sort of a $1 per pound rate to increase the maximum takeoff weight of that aircraft. Same thing with engines. Again, sort of higher thrust equals sort of higher cost, and that sort of generally gets directly reflected in the value of the aircraft on a pound per pound basis, on a dollar per dollar basis. Other sort of items there, perhaps slightly sort of less common if you could use that term. Certain areas of the world, in terms of certification package, two main ones being FAA and EASA. Again, to operate kind of in those regions, again, there are certain requirements. to operate those aircraft in those jurisdictions, or indeed those countries that follow those two jurisdictions. And as I mentioned before, things like communication, navigation packages as well, depending on again, requirements, the operational requirements of the aircraft. Just the two pictures on the right there, obviously same aircraft. Obviously externally they might look exactly the same. Obviously, sort of apart from obviously the airline's colour scheme in this case, we've just got the Boeing house livery. So there's not usually many telltale signs as to kind of, well, what is different from one aircraft to another in terms of airlines. I mean, there are some external differences. You may be able to spot one of the noticeable ones is sort of winglets. Obviously, in this case, both these aircraft have got them. So that's one external clue. I think other items might be like SATCOM, so it's a little bubble you get on top of the fuselage there. Again, that's related to, again, in terms of communications, if you go transoceanic flights. But generally, from an external point of view, as I say, the specification of the aircraft is not so visible. Obviously, it's a requirement for an appraiser because it has an impact, obviously, on the value, both obviously, in today's market and obviously going into the future as well in terms of residuals. So sort of to pick up where sort of Paul left off, covering sort of the just generic, this sort of half-life, this kind of like an appraisal nicety in terms of the starting point. So we've got like this half-life value of it, these sort of market or base scenarios. As you can see, add to this then, so that's our starting point. Then when we go to value an aircraft, so we first then look at the specification. So as I mentioned here, obviously the weights, the engines, all the other bits and pieces that can add long-term value to the aircraft. So in this situation, so we've got an aircraft starting off at 43 million, all the other bits and pieces on top of the standard specification of that particular type of aircraft. For instance, let's say it adds 2.6 million. Right? Then now moving on to just some quick observations here. As I mentioned, obviously not all specification equates to value. To say certain items can sort of be inherent in terms of they virtually appear on every single aircraft. So while they're actually an added option over the standard spec, literally every aircraft has one anyway. And again, this gets factored in kind of this generic value because it's sort of every aircraft has its inherent value to begin with. Indeed, obviously, depending on the actual appraiser, and again, certain appraisers are more depending on kind of scale and the size of the appraiser, shall we say. Obviously, some appraisers are more aware of kind of what adds value, being perhaps slightly more in touch with the market in terms of what's going on. So there can be a difference there. Or indeed, obviously, say in the case of a transaction, the purchaser may not receive any specific value in a certain spec. Indeed, see the aircraft here. Let's say it's been an old aircraft and it's being trade converted. Basically, they're not going to pay for an interior because it's going to get ripped out straight up and replaced with a door on the side. So it's those sorts of factors as well. So that's in terms of specification. Move on to the maintenance adjustment side of matters now. So again, just briefly, just to introduce the topic. Obviously, so why maintain an aircraft? Obviously, not going to sort of, again, this is kind of a topic in itself. See three main factors. One, see the operational side, specific obviously again to the airline. It needs to maintain a serviceable and reliable aircraft to meet its timetabling and scheduling requirements. So obviously, if you get an aircraft that's going tech on the stand, obviously you're going to annoy the passengers. Obviously, they're going to have to get compensation, and obviously, potentially, if that keeps happening, they will go somewhere else. You've then got obviously the regulatory requirements. I suppose this sort of sits in hand with the operations requirements as well. well-maintained aircraft? Should people sort of they rely upon aircraft? Or perhaps the two don't sort of always sit hand in hand, but generally that's what you would expect. Obviously, the national authority requires obviously regular periodic overhauls of all the major components on the aircraft. That's something we'll just come on to shortly. And lastly, and again, more focused obviously on the appraisal side here is obviously value retention. So obviously if the owner of that aircraft, that asset, comes to sell it, then generally it's seen favourably that the aircraft has been well looked after throughout the course of its life, and may obviously command a slight premium in terms of its value when it comes to be sold. So again, just and Paul covered certainly this first one here in terms of the actual terms that get used in appraising aircraft. The first one obviously here being half-life. So again, this assumes that the aircraft is halfway through all its major maintenance events in terms of overhaul and restoration. The other two is first one's called full life and the other one's called run out. And as you expect, these are kind of the two that are kind of sort of polar opposites. So the full life is basically sort of an as-new condition. So it's obviously, of course, an aircraft's life. There is obviously a requirement to say for maintenance to be performed. And when that happens, you're basically sort of re-lifing the aircraft in terms of value that it commands. So obviously, the best condition you're obviously going to get is when it's effectively the aircraft's brand new, delivered from the manufacturer on day one. A full life tries to get it back to as near as condition as possible as you can achieve with that. Obviously, the opposite end of the scale, you've then got run out, as you expect. Obviously, this situation arises obviously with older aircraft that are coming to the end of their useful economic life, and again, sort of the airline, the owner, is running obviously that aircraft down to the point where it's trying to extract all the useful life remaining on it, because obviously they want to get maximum benefit out of it. So it obviously the next transaction that occurs on that is basically for the aircraft to be bought by somebody with a view to parting it out. So that is basically a situation where, again, you've got all the major components have, it says here, they've got minimum time remaining to their next scheduled overall inspection, whatever it might be. I won't go through that slide too much, just in the interest of time. You can improve that at your leisure, but again, it's just some of the factors, processes we go through as an appraiser when dealing with maintenance adjustments for aircraft. The point probably here, again, won't try to not dwell on it too much, in terms of the technical records. While we're obviously, again, from an appraisal standpoint, probably our primary focus is obviously the actual condition of the aircraft in terms of the major components. But obviously a big factor in this is obviously all the technical records and all the data that supports that, to say, okay, a check's been carried out, but you obviously need evidence to prove that that was actually carried out to the required standard, and it was obviously suitably signed off. Again, this is a whole session itself. But again, it is kind of a factor that, from an appraisal standpoint, one of the general assumptions is that an aircraft has full and complete records and are maintained in the English language. Because obviously, if there is any gaps in the maintenance records of the aircraft, obviously then there could potentially obviously be a cost there to reconstitute them, or indeed if there's no records, then you might again have to put the engine through the shop or put the aircraft overboard again. There simply isn't records there to prove something, but when something was last done. So in terms of what an appraiser looks for when it's valuing an aircraft in terms of its maintenance status, just got here the major ones we consider. So firstly, what we call airframe heavy checks. Obviously, aircraft go through a cycle of checks from sort of minor through heavy. But sort of the minor ones, sort of, sort of, they use the old letter terms here, sort of the A's, the B's, and sort of C checks. They're generally considered part of sort of everyday operational requirements, and typically they don't get adjusted for unless they are sort of what we consider sort of heavy C's, which exist on certain sort of maintenance packages. But generally, what we're looking for is what we call like say the heavy check, like D check, sort of Boeing pilots, and this is broken down, say. Again, sort of system something again that onto parts of engine, but major component. Another one, the past has been probably a factor, but certainly now, given the sort of the size of some of some of the cowlings on modern aircraft and twin arms is thrust reversers. Again, they're sort of, they're sizable items and they do need overhauling, and there is a cost associated with those. So it's something that kind of occasionally gets looked at as well. That's just obviously a schematic of the LLPs. So obviously we'll find life limited parts right way through the engine, right from the obviously the fan at the front all the way through to the low pressure turbine at the rear. And these obviously have defined lives, which require replacing, say, a certain number of cycles off. Within 15, 20,000, 25,000 cycles of defined life models, which we'll just cover just briefly in a moment. So in terms of the actual the intervals, to come on to that now, so I've broken this down by sort of airframe engines components in terms of the process of their intervals. So it's like the airframe has what's called a hard time, has a hard time limit. So within the airframe maintenance manual, you have to do these checks by a certain time. Or indeed, you can't do them before a certain time, but it's certainly generally a hard limit which you come up against. Now, in certain situations, yes, the airline can get a small extension on these, but generally, there's a fixed interval that the airline cannot go beyond. In terms of engines, again, split here, performance restoration, or pretty much all modern engines are what we call condition monitored. So again, the engine will only be removed from the wing, performance restoration when it falls outside of certain parameters. So again, for like exhaust gas temperature and so forth. So all these are monitored by both the airline and the engine OEM through various service agreements. So again, what you try and do is obviously extract maximum life from that engine without obviously an unnecessary removal requirement to spend what is a not inconsiderable amount of money to restore the performance of it. LLP replacements, they're kind of sort of obviously said hard time. They are obviously fixed limits. I've just put them here into sort of quasi hard time, as you've just seen a moment the chart coming up. It's almost like they never quite get to their full life. They're always removed before then. And in terms of components, to say the gears, the APU, thrust reversers, and a mixture here of both condition monitored and hard time as well. So just to kind of rapidly represent sort of hard time events. So obviously, pretty much, again, let's take an aircraft that's brand new, see 100% of life remaining, and it obviously reduces down to basically, again, to sort of, should we say, a run-out situation. It never obviously quite gets there, but in most cases, sort of somewhere close. Obviously, it then goes into the shop, goes into the hangar. Obviously, it has a check performed, gets relifed, sort of theoretically back to 100%, and it starts again. So you get kind of this sawtooth effect, again, alternating between this kind of sort of run out, full life, and sort of half-life status in the middle. Mentioned about the sort of this quasi hard time events. So this has got, again, sort of around life limited parts. So if we say we take a part that say has sort of 30,000 cycles, you can obviously run it if you really wanted to up to that 30,000 cycle limit, but invariably have some LLPs are removed before they get there. Sometimes these parts can be removed with sometimes 8,000-10,000 cycles remaining. Now there are various sort of strategic decisions for doing that. Obviously, you're not obviously utilising kind of the full life of these parts, which is where this kind of green type of concept comes in. So you've got this kind of sawtooth effect, but it's kind of reduced at the bottom. The other one is obviously the condition monitored. So obviously, again, there's kind of no sort of defined pattern here. So as I said, with this, kind of the item or the actual component only ever removed on an as required basis. Obviously, that depending on the nature of the operation and so forth, this can obviously vary in terms of timing of when that happens. Here we've just got a summary. I've just chosen sort of a single-aisle aircraft, a twin-aisle aircraft here, just to give you kind of an appreciation of some of the intervals in relation to these checks. So the major one, again, being that kind of that heavy check on the airframe. And then you've got landing gears, fairly standardised throughout the industry, sort of 10 to 12 years. Same sort of with thrust reversers, and sort of APUs can be, sort of all over the place. But certainly sort of in terms of these are sort of some of the current sort of where we are today with these sort of particular aircraft types. When a type is introduced into service, some of these checks can actually be lower. Certainly, obviously, when the A320, the original A320 came into service, some of these obviously C-check cost and the heavy checks, I think, started off as life as sort of 5 or 10 years, and have gradually been escalated as obviously through the MSG3 program. These have been, there's been industry experience. Aircraft have been through checks and kind of more understood. Hence, the authorities can then escalate the time of these tasks. Similar sort of thing with engines, just done that separately, just because of kind of the performance restoration side of the cycle life. But again, just kind of gives you an appreciation in terms of the number of flight hours or flight cycles you'd expect to see an aircraft stay on wing. Say in terms of life limited part cycle limits as well. Again, depending on the engine, some have uniform LLP limits, so something like 787, kind of 15,000 cycles. You take something like the CFM56-5B on the A320, and you've got a range of different lives within that engine, and yes, it is, and again, which can kind of come again in terms of the engine management. Sometimes get a bit tricky because you're always going to be sort of slightly suboptimal in terms of getting the cycle life, LLP cycle life, or performance restoration. Again, it's a bit of a juggling act when it comes to that. And indeed, obviously, what we call first run engines, so again, engine straight out of the box, should last slightly longer than say an aircraft. An engine that's then been overhauled, what we call like a mature engine. And again, it can be sort of somewhere between sort of 10 to 20% time difference per wing. And again, it's something when you're doing an appraisal, you kind of need to take into account. You use kind of an estimate of what the life of it is expected to be able to perform its function in terms of powering an aircraft. Just that thing about harsh environment, comment there. Again, this obviously it is kind of a big effect in terms of engine time on wing. So you've got kind of a sort of a map there, kind of sort of laid out kind of the three different kind of sort of severity regions, if you like. So you've got benign, moderate to harsh. So again, so obviously certain areas as well, dusty, sandy, and so forth. A really big difference, big influence in terms of the time on wing, on engines in terms of performance restoration requirements. So again, when you're doing an appraisal, it's obviously helped to understand the nature of the operation of the aircraft, or certainly where it's based. So obviously areas like the Middle East and so forth, dusty, sandy environments. Again, this kind of needs to be taken into account. That just kind of gives you a graphical representation. We just covered it in a table a few slides ago. That just kind of, let's say, gives you a chart just to kind of show you the difference in terms of intervals for the various components across both twin aisle and single aisle aircraft. And then also you've got, again, cost differences as well. So again, you can just see kind of appreciate some of the sizable sums of money that are involved in terms of maintaining an aircraft, which sort of, as I said, generally get reflected directly in terms of value. So I suppose just to summarise all that, then got here just a table sort of summing up. Again, you've got 320 and the 787. Just summing up there all the major check items. Adding all up, so the A320 I think you're at the sort of top end of the team. I think that's sort of 20 million. So if you were to basically renew everything, that's kind of what you potentially be looking at. Seems the 787, kind of the money you'd be investing basically to relife it back to new. Just bear in mind, obviously, with the engines here, we've got two engines, which is the case for 98% of all aircraft operate these days. So that, again, coming back to the chart, the end of the previous section, and now you've got, obviously, we've taken into account half-life, we've got the specification, we've now added on the maintenance condition of the aircraft. Invariably, what you find, you go through all you go through that process, and literally probably 7 or 8 times out of 10, you probably find that the aircraft usually hovers somewhere around like the half-life. There never seems to be this huge fluctuation between sort of a full life or a run out. Certainly, in terms of sort of what we call midlife aircraft, certainly when you've obviously got a newer aircraft or a very older aircraft, obviously you do see these fluctuations, but generally you go through, do the sums, and you find out that, say, you sort of within this sort of half-life level. So obviously once you've got that, obviously then you've obviously got a more accurately, or a value that obviously tries to more accurately reflect the true condition of the aircraft. Obviously, key takeaway here is obviously it is a value at a point in time. Obviously, as an aircraft gets used, it gets flown and used, it's obviously burning all that maintenance time. So obviously, you could do a valuation, in a week's time, a month's time, a year's time. Obviously, that value is going to be constantly changing. Which again is why you have this kind of half-life value, because it's kind of this this midpoint everybody understands then. And lastly, obviously, just in terms of, let's say, it's important to understand the context of the valuation. So when an appraiser gives the valuation within the letter, it should be clearly defined to say what is really taken into account. So obviously, what if you haven't got all the maintenance, what bits of the maintenance you've taken into account, or if you haven't been, you might only know some of the spec of the aircraft from doing some research, or you've not got the full specification. So again, when you state a value, it's important obviously to say give the context of what is actually included within that valuation. That's enough from me. I'm now going to throw it over to Ed, who's going to do the last section, just in terms of sort of the appraiser community in general, just covering the market as well.
Thanks, Stuart. Okay, I'll try and whiz through these because I can see we're running close to our cut-off point. Just a few brief comments on the appraiser community itself. Bearing in mind there's so many aircraft that need valuing and so many investors involved and lessors, there aren't actually that many appraisers out there. A lot of them are based in the US, not surprisingly, I guess, as that's one of the largest markets for aircraft and where the aviation finance piece really took off. But there's quite a few based in the UK. There are some others in other parts of the world now. There's a growing number occurring now in India and Asia. But basically, there are some fairly big names out there, and then there's a number of smaller companies, and then there's a number of specialists that sort of focus on particular parts of the market. In terms of choosing between appraisers, again, there is a lot of choice between them in terms of the types they cover and the quality of them. And I guess in terms of as an end user, somebody who would use appraisers, I guess what you're looking for is, if you're in this business for a while, are you going to build a long-term relationship with them? Are you going to take the trouble to understand their viewpoint on the global market and work with them? Or is it just the need for a particular one-off, desktop appraisal or valuation, not really too bothered, about the quality? It's just fulfilling a legal requirement, maybe just have an appraisal done. There's lots of different reasons why people get involved with the appraisers. But if you're serious about working with the appraisers and using their information, then probably need to ask certain questions. Okay, what kind of data are you capturing? Who do you work for? Do you have any historical accuracy that you can display to measure performance? See samples of the report, see the quality of what's in there. Do they cover more points than others? Do some just do like a bare bones valuations? Do others provide market commentary and those kind of things? Are they recognized and accepted by other financiers, lessors and investors? And again, can they cover all types, or are they specialists in a certain market? And then there's also the appraiser perspectives. I guess in terms of when you're looking at market values, you'd expect appraisers to be roughly in the same ballpark. They're hopefully capturing the same kind of data, getting the same kind of data points. And you'd expect to see them roughly within the same area, although some might respond more slowly to events than others, especially when there's fewer data points happening. Such as, for example, when COVID happened, some appraisers didn't move very quickly. Others appraisers moved very fast because they could see the market had changed. The supply and demand balance had changed. Demand for aircraft had changed, and that would need to be reflected in the values. Where appraisers can be different is on that base value, that long-term economic value, effectively a depreciation curve, because you can have a different view of the future between appraisers. So one appraiser might believe, for example, the market's going to go towards point-to-point services, so you'd use smaller wide-body aircraft. Others might think the hub and spoke system is going to grow in the future, therefore they'd favour some of the larger aircraft like Boeing 777s or Airbus A380s. So on base values, you know a difference of opinion between appraisers is probably not a surprise. On market values, you'd expect to see them fairly close. And if there are outliers, then you'd probably want to ask the question, okay, what are you seeing that's different from the rest? And there are some underlying philosophies, I think, that are probably worth bearing in mind in terms of an appraiser perspective. And one of them is that, you know, as an aircraft gets older, you know, there's a relationship between those different vintages from year to year. And you'll find that, you know, appraisers will probably get new delivery pricing data points quite easily. Well, it's not easy, but they'll get more of those than others. And also towards the other end of the scale, at the end of life, you know, the appraisers will probably pick up data points as aircraft get partied out. And as Stuart mentioned, there's a lot of value in the engines, and you tend to find that the value at the end of an aircraft's life is governed by the condition of the engines and the marketability of the engines. So you have those two data points, and it's a case of crafting a line in between, capturing data points in between as well for, you know, 5, 10, 15-year-old aircraft as well, and building that relationship between those different vintages. And then there's also going to be a relationship between one aircraft type and another. So as we mentioned it previously, you know, an A320 and a Boeing 737 operate in the same market. So if one is moving, the chances are the other one will move, unless there's something else going on in that marketplace. Same with the wide bodies. Two types of the similar payload range performance should operate, you know, in conjunction with each other, or one will have an influence on the other. They don't necessarily need to be the same value, but they might parallel each other in terms of how they respond to market movements. So that's a brief overview of the appraiser community. Now, just to quickly look on what we're seeing in the marketplace today. Sid showed this chart earlier, and I'm repeating it here just really because it has a big influence on what's been happening to aircraft values. So you can see on the right-hand side on the domestic chart, the values, the seating capacity dropped substantially, but the market has recovered quite quickly. And in domestic markets, that's where you'll tend to find the narrow bodies and the regional aircraft. So those values responded more quickly. They didn't fall to the same extent, or at least they've improved more quickly than others. If you look at the international market, that's been a much less positive improvement. And that green line at the bottom of the chart, on the left-hand side, is the Asia-Pacific market. And of course, Asia-Pacific to the US, Asia-Pacific to Europe, Asia-Pacific to the Middle East, they're all long-haul markets. So we've been missing, or the market has been missing, that long-haul demand and the demand for wide-body aircraft. So wide-body values have been more severely impacted, especially for older aircraft. Here's a chart that just shows you what's been happening in the past year or so on new build aircraft. And we've not seen that much change in terms of new build values and indeed in new build lease rates. In fact, in some of the lease rates, there have been some improvements. And the reason there really is because, you know, new build aircraft they're the most fuel efficient, they're most reliable, and they're most easily financeable as well, because they've got their economic lives ahead of them. So we've not seen too much change in terms of where the market value for new build has moved. On the A320neo, 321neo, there's been a slight improvement over the past year. Again, I think they were at a low point January 21. So as the market's improved, those have improved. And as the 737 MAX has taken its time getting back into service, there's been a lot of demand for the neo, and it's been building up a good customer base and good population. On the wide bodies, like the A330 and the A350, still, again, because of that lack of long-haul demand that has been there in the past year or so, they're still hovering around the same kind of values. The MAX, again, those numbers came down quite severely because of the grounding, and also because, you know, that Boeing weren't building as many MAXes because of the grounding. But as the year has gone by, those market values for new builds have improved. There were a lot of aircraft that were surplus to requirements for a lot of carriers. A lot of carriers had failed or they'd cancelled their orders, or lessors had cancelled orders. So there's a lot of inventory that needed to be placed, and Boeing did a pretty good job of placing those aircraft. Sorry, if I can just explain some of those abbreviations. CMV stands for current market value. So that's the market value as Paul described earlier. And MLR stands for market lease rate. So what we're showing here is just the market value in Jan 21, the market value this week or last week, and the percentage change from that time. On the left-hand side, on the right-hand side, we're showing the same kind of data for the lease rates. The lease rates tend, on this picture, they tend to assume, I think for a narrow body, we're probably looking at 8-year leases. For a wide body, probably 10 to 12-year leases, and what they tend to represent. So other types that have probably changed: the 777-200 freighter, the 200 LRF freighter. Market value there has taken a little bit of a knock. That's not because it's any worse an aeroplane, but it was working at a premium this time last year because freighters were in demand. What we've seen since then is the launch of the A350 freighter, the launch of the 777X freighter, the successor to this model, and also conversion programs improving or increasing for the 777-300, the 777-200, and the A330. So there are operators now have a lot of options, and there is competition to the 777-200 LRF. So that'll probably have an impact on the values as well. On the ATR 72-600, there we see a big increase in terms of the lease rate, 25% over the past year. And again, that's from a low point last year. There were a lot of ATR 72s in inventory that hadn't been placed, or where the customer had walked away. ATR has worked hard to have those aircraft placed. It's soaked up the inventory, and that's helped to improve the lease rates of those types of tools. So just to confirm again, MLR stands for market lease rate, and CMV stands for current market value. If I can move on to the next slide. So that was new build aircraft, and here we're looking at 10-year-old aircraft. So again, a whole range of aircraft types, Airbuses, Boeings, and some of the regionals as well. Here I'm showing the values, the current market values, CMV, in January 2020 and January 2021, and today, and this month's values, and then just the percentage change of the past year or so. And what we can demonstrate here, or the point we're trying to make, I guess, is the values fell the most during 2020 when the pandemic, took hold in terms of stopping flying in most parts of the world. When like 17,000 aircraft were on the ground. So we knew at the time, or we could see at the time, that this was going to go on for a while, and values would be impacted severely. So we saw the biggest drop in 2020. And in 2021, as the market started to recover, values started to stabilize a little bit, or the reductions fell away. Not for all types. So you can see there for the A330, 200, A330, 300, there was still a 30% fall in value just in the last 12 to 15 months. Whereas other types, like the 737-800, has stabilized. Types like the ATR has stabilized as well. So different aircraft are behaving in different ways. I mean, for example, if you look at the Dash 8 Q400, that was still falling away. Part of the reason there is that the production has ceased. Temporarily, we're assured by DHC, and they're relocating the production facilities. Excuse me. But that has yet to manifest itself. And so, of course, compared to the ATR 72, which is still in production and is increasing production this year and next year, its performance has been slightly different. On the market lease rate front, again, similar picture there. Some types less affected. I think on the A330-300, the values have effectively hit a floor there in terms of the lease rates and what can be achieved. Because quite often we tend to find that there's a certain lease rate, a floor to the lease rates where if the lessor won't lease for below that rate because it's probably more, it costs them more money to do that. So for example, if you have to reconfigure an aircraft or carry out some maintenance to put it back into service, it's just not economic if you can't get the lease rate to justify that expenditure. So some lessors won't rent for below a certain price. There's a question there, what are the MLR changes are different to the CMV? One fairly simple reason there is the lease rate is much more responsive to the market. So there's aircraft available and you can lease short-term, long-term. The investment isn't so great, it's just on a monthly basis. In fact, for the past year or two, a lot of it has been on power by the hour systems where you're just paying for the hours and the cycles performed rather than a fixed monthly lease rate. Although again, as the market improves, we're now slowly switching back to a fixed rate. So the market lease rate is much more responsive to events and to availability. Whereas the market value, you're probably not trading an aircraft unless you're specifically into it, and so it behaves in a different way. You might want to use an aircraft for 5 years under a rental, but you wouldn't want to buy an aircraft and have to think about having to sell it after 5 years. So there are different mechanics and dynamics at play when you're looking at market value compared to lease rate. The two do have a correlation because obviously the lease rate helps. If you're leasing for a long time, it could justify the market value as well. But again, I think it's the timing and the elasticity are slightly different. So they're behaving as part of the cycle differently. There was a question earlier, I think from Katrine, about the things that are happening in Russia and how that's affecting the lessors. And we've been looking at it fairly closely because we thought the pandemic was a fairly unique event, and we've got a fairly unique event happening again now. So a lot of the focus with Russia, especially driven by the sanctions that were imposed, were on the aircraft that were leased into Russia. And if we look at the 957 aircraft leased into Russia at the moment, or should I say operating in Russia, the vast majority were an operating lease, and the remainder, I think 782 are operating lease, and the rest were owned or financed. So of that number, we then looked at, okay, so how many are managed and owned by the major lessors? And I think 6 of the major Western lessors account for almost 300 of those aeroplanes. And another 200 of them accounted for about probably another 25 Western lessors who might be leasing as many as a dozen or as few as one. So, 3, 4, I think 480 odd aeroplanes are Western leased aircraft, and they're the ones that are subject most to the sanctions. They're the ones that the lessors have been told they need to remove the aircraft by March the 28th. And the others are leased by Russian lessors, which are probably less vulnerable to the sanctions. And in terms of the aircraft types that are involved, the A320 family is a big part of that, less so the wide bodies. The Boeing 737 is a big part of that, less so the Boeing wide bodies. And then there are others. There are regional aircraft. There are the Russian aircraft, such as Sukhois, which are a big part of that as well. So, and then there's some fairly major Russian fleets out there. I mean, Aeroflot has 140 aircraft that are leased. Rossiya is over 100. S7 is over 100. So there's quite a lot of fleets, and there's a lot of concern and interest and uncertainty about what's going to happen to these aircraft next. One of the questions that's always asked is, are these aircraft going to be able to be extracted from Russia? And that looks very unlikely at the moment. Impossible by March the 28th. I think the aircraft that were already outside of the country on the day the sanctions came into force, there's maybe half a dozen that were able to be recovered. But the rest are within Russia or flying within Russia. Some are still flying, others are parked, and it's unlikely that they're going to be coming out. I think we've seen avoidance from the airlines, and in fact, I think the airlines have been told to not be helpful. And then there's also the issue of the certifications. And so a lot of these aircraft, because of either tax purposes or just because of the airworthiness requirements required by the lessors are of a higher standard. They're either registered in Bermuda or Ireland. Those registries have cancelled the airworthiness of the aircraft, and the Russians have now put some of them, or are starting to put them onto the Russian register and subject to Russian regulations. That probably contravenes quite a few principles as well, including the Chicago Convention. So this is getting to be a fairly complex and messy system. The question arises about insurance as well, and that has reared its head in the last few days. And there is things like contingency all risk or contingency war risk insurance, where the lessors, if they don't feel they're protected by the airline's insurance, they take out their own insurance to protect them. And the question is whether that's enforceable, and who pays, and what defines whether the aircraft is lost as an all risk, as a war risk. So we're in the middle of that process of working out what's happening next. Yes, the law signed by Mr. Putin today, it does make it more complicated. It restricts the lessor's ability to recover those aircraft. Not that it wasn't already restricted in the first place. It just makes things much more complicated. So I think the insurance route is the one that people are looking at as the next step. But in the meantime, just keeping an eye on the aircraft as best as possible in terms of whether it's possible to actually carry out maintenance using domestic engineers to carry out Middle East inspections or make copies of records. I don't know if that's possible. I suspect lessors are addressing as many points as they can behind the scenes, working quietly behind the scenes. So this is a situation that has still got to play out, I'm afraid. As appraisers, we have our own view, the Ishka view, the appraised view. As I mentioned earlier, we also have real data points, so we know what's happened in the past. A third initiative we have is what we call a pricing benchmark, where we capture what we call the market view. So we talk to the brokers, the lessors, people who are involved in the trading market, and capture their views of where they see the marketplace as well. So it's another view to add to the collection of data points out there. As I mentioned earlier, we're trying to improve the transparency and remove some of the opaqueness in the marketplace by providing investors with a bit more confidence and comfort in the marketplace. And so the pricing benchmark, we just look at some of the key types at the moment, and every quarter we canvass the anonymous opinions of people in the marketplace, find out what they're willing to pay, what they're seeing in the marketplace. They may even give us some real numbers as well to support the picture. But we're really just trying to capture everyone's views and show the spread of those numbers, because as the spread widens or narrows, again, you tend to get more comfort or confidence in the values that are being produced. So these are just some of the charts. This is for a new build A320neo. We just collected the recent set of data points on this type. So on the top chart, those lines represent what the contributors to the pricing benchmark have given us in terms of what they see as the average of the high values that they see, the average of the low values that they see, and then the average in the middle. So you can see for the A320, on the solid lines are encumbered. So this is what they're seeing in terms of aircraft in sale and leaseback markets, so aircraft that are trading with a lease attached. And you can see that the numbers sort of reached a low at around Q2 2021, but have since improved. So it's a very competitive sale and leaseback market. The lessors are trying to take the opportunity of adding or renewing their portfolios, adding younger aircraft, newer aircraft. There is capital still available to deploy, and they've been doing that. The dotted lines on that top chart, they represent an unencumbered asset. So this is an aircraft without a lease, also called off-lease or naked aircraft. And you can see that there was a wider spread back in Q1, as people were still looking for opportunities in terms of trying to place aircraft that were off lease and looking for homes. But again, that band has tightened, and so now, and has improved quite dramatically. So the unencumbered aircraft values are almost as close as they are to the encumbered values. And what we're seeing on the bottom chart, on the lease rates, there we're seeing a bit more stability. So the aircraft, the leases came down to a low in about Q2 2021, but have since stayed fairly flat. And I guess if you've got a stable lease rate, but the values are increasing in the sale and leaseback market, this means that airlines are able to raise additional financing for the same lease costs. So I think the airlines are the winners in the marketplace at the moment. They're getting good deals, mainly because the lessors are competing between themselves to actually capture some of these deals. And of course, they'll be focused on some of the stronger credits and dealing with some of the stronger credits, who are the ones that are taking delivery of aircraft these days. And of course, there is that focus on new build aircraft with the higher fuel costs that we're seeing at the moment. For the 737 MAX 8, slightly different view, but generally heading in the same direction. There's been a recovery in the MAX 8 values over the past year or so. And again, that's been partly driven in the sale and leaseback market because the aircraft have come back into service since the grounding was lifted, and Boeing has managed to put away some of the spare inventory, and so that's improved the demand from a relatively low base. Still running, I think, below the A320 in terms of compared against each other. On the unencumbered side, on the 737 MAX in the top charts, there's been a slight dip there, and again, partly because there is still some capacity out there still to be placed, and there are concerns in the marketplace today. I think Omicron played a part there in terms of just dampening that effect in the Q4 of 21. And on the lease rates, again, in order to place some of those aircraft, they've had to do some fairly generous and attractive lease rates to stimulate that demand. That probably reached a floor in Q3 and has picked up again in Q4. So we're seeing trends in the marketplace that can be accounted for by the various dynamics that are happening for specific aircraft types. So really, just to summarize all those points, I think Sid summed up the airline side of it fairly well in the first part of this session. In terms of the aircraft and financing side, I think, as I mentioned, the market correction, the decline in values that happened when the pandemic took effect, I think that's been done for many of the types. For some of them, there's now the potential to recover as they get new startup airlines or refleeting of airline fleets. So we'll see some recovery for some of the types, although some of them, they've probably taken a knock and will probably stay low for a while as I guess their retirement has been accelerated. This tends to happen in a downturn or a situation like this. There's a financial appetite is still very strong for the young and most popular assets, and that leasing competition does give the airlines more options. It helps them to raise liquidity by doing sale leasebacks. As Paul mentioned, the base values are under review. For some, there's some fine tuning going on, but there might be some more corrective actions in the wide body space. I think the markets realise that the secondary market for types like the A330, the 777-300ER is not as large as might have been anticipated, and the cargo conversion market is probably the home for those, but that tends to reduce the value of the assets in turn. So, some base values will be reviewed. Won't necessarily need any knee-jerk reaction to that because it is, after all, a long-term economic view of those assets. There's still a lot of aircraft in limbo. Do they return to service or will they be permanently retired? And again, that will be driven by demand. And there is some concern that there may be a shortage of aircraft in a year or two's time, in which case some of those aircraft might indeed return to service. The OEMs have their own production and supply chain issues, and Boeing is still trying to ramp up the MAX production rate. The 787 production is stalled at the moment. 777X is delayed a little. Airbus as well is struggling to get out the A321s from under its feet. So there's still work happening there. The freighter conversion market, that's been booming. Every week we see more freighter conversions accounted for or contracted. And some of them are now, some of the lines are now heading out into 2025, 2026. Again, it's a case of, you know, if you've got the aircraft and it's not looking like it's going to have a very strong secondary market, a freighter conversion is probably a good option. And then there's the lessor's role in 2022. They provide a lot of liquidity into the marketplace. They absorb a lot of the deliveries, they provide the funding. But we also expect to see some lessor consolidation. The big leasing consolidation last year between AerCap and GECAS. We've seen other lessors recently. In fact, I think last week, I think Chorus and Falco, two of the regional lessors, were getting together. So there's lots of happening in that lessor space as well. And of course, what we can't forget is the current conflict, the invasion of Ukraine, is going to change the landscape a little bit again. So that's our quick overview. You have the email addresses of all four of us who presented today at the bottom of this screen. So feel free to contact any of us. I don't know if there's time for any questions at all today or not, but thank you for listening, and we're here to help.
Thank you, Eddie, very, very much. Listen to the whole ISCA team, really. You know, Eddie, Stuart, Paul, Sid. You know, it was another, you know, really, really strong, informative session. Right, you know, we heard about sort of the constant, unchanging fundamentals with respect to credit analysis, with respect to valuations, with respect to appraisals. And then, you know, it was also really interesting to hear about some of the current market perspectives and insights, you know, especially in light of everything that's going on at the moment. You know, as Eddie said, if there's any questions, you know, everyone has my email, obviously. Eddie's kindly shared the ISCA team's details there as well. You know, but other than that, I really hope you guys enjoyed tonight's session. And again, another special thanks to the ISCA team for joining us.
No problem. Thanks, Robert.
Cheers, guys. Eddie, I'll drop you a line in a minute. We'll be in touch. Yeah.
Okay. Thank you, everyone.
Thanks, everyone.
Thank you.